Although Latin America is vulnerable to catastrophe events, in the past 4 years, the region's insurance markets have avoided any significant catastrophe-related losses. A new AM Best report, part of its annual look at the global reinsurance industry, explores how this dynamic playing out. And here to discuss the region's reinsurance landscape is Eli Sanchez, Director, AM Best, and Ricardo Rodriguez, Financial Analyst. And Eli, the report notes that global reinsurers' risk appetites may not align with the current market conditions in Latin America. How is that impacting the markets in Latin America?
Hi, John. Well, that is true. I think we are seeing difficulties in adjusting insured assets and prices. It's quite difficult for reinsurers to justify the increase in prices to the primary companies when there hasn't been any major cat event that triggers losses or any negative claim development. So in that sense, it's very difficult to translate what global reinsurers are going through in some other regions and the way they want to translate that to Latin America. So we're seeing a little bit there of pushback on the side of insurers and also on the side of global reinsurers in getting to the region. Then you have also to take into account that there's aggressive competition within insurance companies. So that kind of puts a limit on how much they can adjust prices and really take also the pressures that come from the reinsurance costs. We also see some muted government expenditure in some countries. So it's also the projects that are available are not that many. So that increases competition. That really sets the tone for having a more aggressive market there and also being more aggressive in the way they want to have their contracts with their reinsurers. It's another factor we take into account is higher expenditure in maintaining the contracts, especially those excess of loss. And for those companies that are quite sensitive to this kind of contracts, these are expensive. So they are starting to think in way they can take those risks or they can maybe mitigate those risks. Either it could be with coinsurance or maybe increasing their risk appetite to a certain level that they feel comfortable exposing that capital. For more conservative insurers, that has pushed them out of controversial segments. That can be said of many surety businesses that are out of the risk appetite of reinsurers, and therefore insurers are not able to take that business. So I think that those are the main elements that we're seeing in the region. Of course, those vary from country to country as Latin America has different realities, but I think we can say that those are the main points that we see.
Meanwhile, Eli, the region actually hasn't been hit by a major catastrophic loss in a number of years. Do you worry about these domestic or regional companies' experience or letting their guard down?
It's not really a concern for us. We have a strong cat culture in the large countries that are exposed to these events, mainly in Mexico, in Peru, Guatemala. These are the countries that have the highest exposures, that have good companies that are really well prepared and that they have lived through all of that. You have markets leaders with more than 50 years of experience that have been exposed to several earthquakes in the region. So really that's not a worry because they have in mind that all the time. However, we see that corporate governance becomes important for companies really to have a match between their primary insurance coverage they offer and a match with that contract to their insurance contract. So they don't have any gaps in terms of times and exposure. So in terms when an event happens, they can go back to their insurer and really ask for that coverage in a timely manner and also in the amount that it's being claimed. For small companies with a highly large capital to cat risks, those are the ones that could worry us. They have an exposure in their book of business or on the credit risk. However, we have seen recoverable practices increase after the pandemic. It has been on all the segments, but in these kind of events, we are particularly worried about access to liquidity. So that remains a focus in our reviews. We see that the financial markets have very good rates and that could really push a little bit for longer terms, but we are constantly monitoring the exposure to these events and also the ALM of the companies to have available resources to face any payment that they have due. On some geographies, we have seen insurers working with risk modelers to improve their PMLs calculations to get better pricing on their contracts. However, this task not only falls on the modelers, it also falls on the companies and their capabilities that they have to gather all the information necessary to make those models more efficient. So we are seeing that being done across large companies and medium companies with high technological skills that can really go back to the modeler and tell them exactly where the buildings are located, how much storage do they have, uh, the kind of territory where they are. So with all this input, modelers can do a better job in having the PMLs calculated and therefore buying appropriate insurance protection for those assets. So I think that's what we are starting to see. Well, we are not so much worried for that. We see that companies are trying to get ahead of everything, and they also have in mind that they are always subject to these cat events.
Ricardo, how did the Brazil market fare last year, and do you think it's still evolving?
Sure. Well, the reinsurance premiums continue to grow annually in Brazil. They're primarily driven by the automotive and agricultural, the individuals and property and line of business. But the overall growth was offset in part by claims that affected one specific line of business, that was the agriculture one. This is the second largest line of reinsurance business in Brazil, and it experienced an increase in claims owing to the crop disruptions in 2021. And it was also followed in 2022 by the large shock loss from the drought in the southern parts of Brazil. And this significantly impacted the local companies. Uh, as a result of this, the market and the insurance companies have diminished their exposures in this segment, and they are led by the offshore players that wanted to minimize this overall risk exposure. In our point of view, we consider that the market is evolving, yes, but at a low pace in an environment of uncertainty and volatile economy, retaining less risk. And it is important to highlight that the country is allowing occasional reinsurance to capture more share in the market, providing more capacity to it. Uh, on the other hand, the currency devaluation has diminished the size and profile of Brazil's local reinsurance market, and this could potentially reduce its attractiveness to global reinsurance players. So we are looking forward in the new initiatives that the companies will take to overcome this scenario of uncertainty.
Latin America is home to a wide variety of economies and governments. So, Eli, how do the political landscapes impact global or regional domestic reinsurers?
I think it is quite sensitive in Latin America. Latin America is always seen as a land of opportunities because industries are not so well developed, but there's also a lot of political instability. So it is always a bet. What we're seeing is that political views filter to the operating ranks in regulatory bodies and into legislation. In this sense, we are viewing a wide array of things. For example, we saw in Ecuador with business-friendly President Lasso, there were an opening insurance market for regional and foreign reinsurers to participate in the life and auto segment, a market that was only available for primary insurance. So this creates an opportunity, and many reinsurers are interested in getting that business. However, on the other side, also in Ecuador, the minimum rating for registering as a foreign reinsurer has been left up, and that minimum rating is really out of the common practices worldwide. It's higher. So that kind of puts a pushback into reinsurers in going to that market. So they are entering a market that it's new, but they are asked a higher rating than in other geographies. So that kind of doesn't make sense for them. So that limits the way they can enter that market. So you can see how something that it's business friendly opens opportunities, but on the other side, there's no communication on the legislative side. So that kind of limits the new opportunities. Then the most obvious impact that we see of these governments is in public expenditure and infrastructure. Um, that mainly impacts the large insurance markets like property and surety. With political instability, few gets done. So less economic activity means less policies. So really, what there's in the market, it's being very fought for. So it's something that we are always looking at how aggressive are competitors go into this business and how much economic activity there is. For example, right now we have Colombia that historically in Latin America was a land of opportunities. Now with a new government that's been in place up for a little less than a year, we have seen a lot of projects of reinsurers being put to a halt because they don't feel comfortable going there with the current policies that are being in place. Although there's a lot of counterpart in the legislative side that it still puts a limit on what they want to get done in those countries. So yes, it permeates everything, the political landscapes. So there's countries that are more exposed to this. There are other ones that are business as usual and growing, and there are strange cases like Mexico when you have a government that is not seen as business friendly. However, there's a lot of confidence in the macroeconomic stability of the country, so that really provides a lot of certainty to foreign investors and to insurance companies to keep participating in this market.
Thanks, Ricardo. Eli?
Thanks a lot, John.
Thank you.
That was Eli Sanchez, Director, and Ricardo Rodriguez, Financial Analyst. You can find the full report online at ambest.com. For AM Best TV, I'm John Weber.